Should we buy when there's blood in the streets? Sometimes these kind of idioms become, unfortunately, a bit too literal, right? The Ukraine conflict is heating up. But on this channel, we are not going to talk about politics. On this channel, we are focusing on crypto. And crypto did do a massive move following all of this increased uncertainty. It shouldn't be a surprise that things are selling off. And the sell-off is accelerating. It doesn't just happen since yesterday, right? This is Ethereum versus the US dollar or versus Tether. And this negative momentum here, it started already in December of last year. And since then, we continue to see lower prices. This is not just in Ethereum, this is also in Bitcoin or in the altcoins. But currently what's interesting around Ethereum is that we are reaching a potential support. By the way, what you see over here, this light blue and dark blue line, those are moving averages that are backtested, the 23 and the 39-day moving average. I've done an extensive backtest on these moving averages. The idea is that you buy whenever the price is above the moving average and you sell whenever the price is below. When you backtest this, you find out the 23 and the 39-day moving average, they historically work the best. The video that explains this in more detail will be linked in the outro of this video. So you might want to watch this in case you haven't yet. So I personally, I like to sell whenever momentum turns bearish. So I'm actually risk off for quite a while now. I fortunately did not take all of this negative momentum here, all of this negative price action. That being said, it does look like we are in a pretty heated situation right now. If you are a risk taker, maybe this is not the very worst time to bet against the market, at least in the short term. But I personally, I like to keep it safer, right? I buy whenever the price goes above the moving averages, even though I usually do not get the best price. I'm waiting until things stabilize. And with the current uncertainty around many factors, actually, not just the Ukraine, also around rising interest rates and economic uncertainty, nobody can really predict how far we might potentially fall further. Now, some things sell off more than others, right? And Ethereum does have some kind of inherent leverage to Bitcoin. So when prices tend to go down, Ethereum tends to fall more than Bitcoin. Bitcoin is only down 7%. It is thus more stable and thus might still have more room to fall until we see a potential support, right? This is another 12% we could potentially fall. But before we look at the larger picture, let's again zoom in and look at what's actually being sold off the most. And what we can see here in the premium alerts channel is that first of all, Phantom fell really sharply, then the general altcoin market, and then afterwards came Ethereum. So far, Bitcoin isn't selling off that quickly relative to the alts, relative to Ethereum. So these are alerts when the hourly RSI is very low. So let's look at this in detail. This here is Phantom, currently at $1.32. This is the hourly chart, very ugly, right? And then when we look at the relative strength index, this is the shakeout that we get alerted in the premium channel, right? Where we go below 20 over here. This is historically a very depressed price. It doesn't mean it can't fall further though, right? This is simply an alert for when you consider to dollar cost average, when you consider to buy something over the very long term, to buy in several times. Then whenever the hourly RSI is below 20, statistically speaking, you do get a better than random price. So let's adjust this here to 20. We don't get these kind of prices very often. We had one over here. That's when we had a comparatively cheap price. Then we just got another one over here. And we see whenever this price is that low, that we go below the 20, we do have, at least for the short term, sometimes some kind of a reversal. At least I wouldn't sell exactly at that point in time when the hourly RSI is that low. We might get a bit of a correction over here. This is definitely a very massive sell-off. And we've seen something very similar for Ethereum. So let's look at that. Again, the hourly RSI very low, which doesn't happen too often. Note this chart over here, it starts somewhere at the end of last year. So this is basically year to date, and we don't have these signals too often. So far in this year, we got it once, twice, and now a third time. So if you're considering to dollar cost average into crypto and hold it for the long term, instead of just buying, say, on the first of every month, you might instead consider buying whenever the hourly RSI is very low. You do get, statistically speaking, better prices. And in order to know when this happens, simply check out that alerts channel over here. What we got is several different cryptocurrencies, so Bitcoin, Ethereum, Cardano, Algorand, Cosmos, Atom, Avalanche, Polkadot, Phantom, HBAR, Luna, Polygon Matic, and Solana. And we've also got a few alerts here that are stock related. If you need any other cryptocurrencies or stocks in here, feel free to simply ask this in the premium chat. Now, where are we going from here? How far can we potentially fall? This is the Bitcoin logarithmic growth curve, very often shown on this channel. I like this model quite a bit because it mimics and it models the price movements relatively well. Whenever we are heated, we are very high on this channel. Whenever we are depressed, we are pretty low. Currently, the lower band over here is at 28.5k roughly. It doesn't mean we can't fall lower than that, right? During the Corona crash over here, we did fall lower by quite a bit, by 30% roughly. The lower band here was 7.5k and we went down all the way to 5k. So if something really unexpected happens, this can potentially go lower. We could potentially, if we take the same kind of buffer, in the very worst case, go to maybe 20k or so, 20 or 19k. But in the grand scheme of things, we are already relatively low. The middle point here, it is currently at 67k. Now, there is a bit of a caveat to this model, which I do think gets left out very, very often. And that's simply the macroeconomic environment that Bitcoin has been in during this time, right? The chart here starts in 2010, and we currently see how Bitcoin, it is more and more correlated with the macro environment. It is more and more correlated with traditional markets, with tech stocks in particular. And if you're wondering how tech stocks performed since 2010, this is your chart, right? It's pretty much straight up with a few blips in here. This is the Corona crash. This is now our Ukraine crash over here. But this is not how stocks always go. They don't always go up. Let's just zoom out a little. This is what it actually looks like. So this here was the .com bubble in the year 2000, right? Where we went down in the technology stocks by 83% roughly. And so I'm not saying this is going to happen again, right? There was way more speculation in technology than it is nowadays. Most of the price inflation nowadays doesn't come from unrealistic expectations around earnings, but rather a very expensive pricing environment in general because of the low interest rates. So I don't expect this to repeat again, but I also don't expect that we will see such kind of a growth until infinity. We might at some point in time move out of this, and given the heightened correlation, which by the way wasn't always the case, right, which just recently increased that much, given the heightened correlation, we might also at some point in time actually exit this logarithmic regression. It is a possibility. It's not being talked about a lot within the crypto space. Most people think this will stay and continue on forever. This though implies here that Bitcoin increases year over year currently by around 70%. So this middle line over here, it raises the expected price by 70%. It was even more in the early days, right? You can see this curvature. In this model, there was more growth at the beginning, but currently with the current slope here, we are looking at 70% per annum, 70. So be prepared for volatility. If we do fall that low, right? If we do go below this lower band, I am personally going to go risk on though, right? I'm going to buy way more, but I'm also mentally prepared that it could take quite some time until we really hit positive returns again. Hope for the best and plan for the worst. That's basically my mental approach over here. If you enjoyed this video, you're probably also going to enjoy the daily market updates around Bitcoin and Ethereum. And of course, the private chat where you can ask me any questions. That's here at thebitcoinstrategy.com, the premium membership. Feel free to check that out. Of course, if you haven't yet, feel free to subscribe as well. I publish videos regularly. And last but not least, you also might want to check out this video over here. It's also discussing Bitcoin in the macro scheme in the context of the Ukraine conflict. A lot of on-chain statistics, a lot of on-chain data. So hope that video will be useful as well. Thanks for watching and see you next time. Bye-bye.